Okay, good morning, traders. Let me know if I'm coming through loud and clear. Get up and racing. A couple of things to show you this morning. The good, the bad, and the ugly. Okay. Hey, Jason, Nathan, how are you guys? Now we'll just race into it. So we'll start off with, obviously, strangely enough, which is probably not strange really, US rallied from the open. So the stock indices, they rallied from the open even after, you can see us, we got actually sold off quite hard yesterday. That was on the back of the previous session, which was a good rally. Hey, Peter. So that was, look, it was unusual and, well, not really unusual. It's just kind of, you get caught up with the previous day's action. It's really bullish and you're expecting a bit of a pullback and a go again, but instead it just sells down all day, nearly coming back to where it started the previous day, which is, yeah, it's some very choppy action at the moment, showing a bit of nerves. But in saying that, the US, like I said, opened up on the at 11:30 open and just rallied from the open, which after what we saw between China and the US, with closing down in Houston, what is it, consulate, then that really drove the negative markets right on the open, which is perfectly timed, right on the open to European session. They got smacked. The Hang Seng was smacked. Dow got hit, which drove the markets lower. You can see this sort of just around that time, was it 1720? So that was around that time there on the SPY, got sold off. So the action was kind of, brushed aside once the US opened. It had all been done and dusted, except for the Hang Seng, and the US rallied. Now, when you look at the underlying, say the DAX and the FTSE, they were sold down the European session, and when the US open started to rally, they pretty much went sideways into the close. It's not really convinced that the US is that buoyant. I mean, there's too many reasons stacking up to be negative. And maybe as the DAX is approaching back at new highs, the FTSE is quite back to the sort of towards the highs. The momentum may be starting to slow, but in saying that, they're always going to be supported by just funds being thrown at the market at this stage of stimulus. So we're still waiting on that US stimulus coming out in a couple of weeks or so. That so there might be a bit of argy-bargy between within Senate on what that package is going to be. I think Trump's banking another million, which is going to continue to devalue the US dollar. You'd expect just throwing funds at the market continuously to support it. Any sort of safe haven buying at all into the dollar's gone, and you just meant more supply means not less demand, but prices will head south on the US dollar, and that's what's happening at the moment. It's getting knocked around, and it's triggering buying into gold. Anything US dollar denominated commodities are doing better. You can see the Hang Seng copper rallied up. Copper actually reacted off those highs again, so we'll look at that. But yeah, it's all sort of US dollar based at the moment, and that's what they wanted to devalue the dollar for a long time now, and that's what they're getting. So it took a bit of a crash to trigger that, the flood of US dollars into the market. Let's look at, so this is an Aussie market. You can see we had which is a shame, and don't ask me why, we had our plan of attack, to bounce into this level of 69 to 796 and 97. Bounce off those highs, we get a lower high into there, then look for a selling opportunity. Now, that's what played out here. You can see popped up. It was a bit hard to trade. We're getting this sort of weakness, and don't know why I got left just sort of standing around doing nothing on that. Was actually looking for a pop off this low and then looking for a bit of a retest and then some weakness to come in, but it just didn't play out. It was just weak right from the open. That flush up just to take out some of these buyers. These sellers flush up, and then there was weakness all the way in. So there's some great opportunities on the SPY all day, but I guess I wouldn't be the only one caught offside thinking that could be some support coming in, but it was pretty much selling from the get-go all the way down to the close, which was, where was that close? 4 o'clock. It's about here, in this zone in here, so you can see just a weak market. Today, it'll be interesting to see whether, we hold these MAs, we start to, bit of a pullback, flush lower, hold a high low, and go again, because the US is just it's not backing off. All right, stretched or not, things can continually get stretched. So maybe our market's looking at that. We had a good pullback yesterday. Let's reset and go again. That's sort of what I'm looking at, but it just depends on the open. What happens in the open? We flush up and then see what happens after the flush, whether we get some weakness and we do something like this, sell off again, just at these, especially around this level of 48. May flush to 62 and then come back, we'll see. Otherwise, if it flushes down just to clear out some of these longs, it may be setting up for a bit of a rally. So a bit of a positive day. Look at Wall Street. It's pushed up. It pushed up into that 27.035 zone, and we're looking at that level. It's backing off there, but the momentum's turn. It's up. You can see that was a sell-off yesterday, which we look at the Hang Seng was a bit more glaringly weak. You can see, but that was a good. It was a tougher selling opportunity because I didn't really get the shoulder that I was looking for. You had to wait till it was down here. Then it was a real grind. So I didn't actually short that through there. I did do something. I just can't remember where it was. I think it was on the Hang Seng, but it really wasn't for much at all. And it might have been a break-even trade. I think I got some on the short side on the Dow, and then it whipped around and stopped me at even. Once I managed to be up a bit, it's hard sometimes when you're watching intraday. You see yourself get up $400-500 ready for it to go, especially after this move down, and then it whips around and stops you out, on a little spike, and then bang, it continues down. That's the nature of the beast at the moment, where this is this high at 27.035. Whether we're going to react off there and come and retest at a lower level and get a lower high to work into on the short side, and we start to really find that as a double top. You can see momentum up, good correction. We're back in, so we start to fail again, especially if we get a key. If we go down and pop back up and get a key lower high, not so much at the level, probably drawn that a bit wrong, but a key lower high from there, that could be some serious weakness coming into the action. All right, so it's probably something. We keep an eye on that. If we hold this trend line, we pull back here, contract, and expand again, and we expand through. I'm happy to take a trade on the long side into that expansion and just see what happens at that level. As long as we can get up, 20 points or so, if you can get on the right side, and then see what happens if it, as this minor pullback holds another high low. We're looking to go up to 27.172. But if not, I would prefer to see this trend line broken, so a deeper correction, break that, and then see what happens on that first pullback. See if we do build that lower high, and then that's longer term weakness to come in. And the Hang Seng, you can see that sell-off. That was, where it got smacked, and it was a choppy market. The only real trade we got on long was just in here, and it wasn't that big, to be honest, considering what happened. It was just really stretched. I think I got a little one there, took it off, got another one just into these highs, and that was really risky because it was well and truly stretched at that stage. And then it fell away. Then we started getting this distribution pattern. You've got a good red candle here, come back up, fail again. You can see on this this one candle, which is a bit of there was a selling opportunity there if you drop it down to the 1 minute chart. And I was looking at that. In this sort of price action, I wanted to see a bit of a pullback, break at that level, and then a lower high to come into play. It just didn't sort of grind it lower from there right into the 2 o'clock close. And you can see what happened later on. We got market chopped around, held below the longer term MA, held below, took out these lows, bounced back, and then started to really find some weakness. And it was in here, if you looked at the 1 minute, you might have got a short on. It was a very aggressive short, but it paid out big time. And it wasn't the world's best setup, but it did pay out quite nicely if you could have got it on. I didn't. I missed all that. I sort of was out, come back and saw this sell-off and went, oh, great. So left on the sidelines on that. So that was it. So the Hang Seng's really, whoops, just looking to see, two things. This is the close at, this is the close at 5 o'clock in the morning. So that's where the futures closed. And we had all this action on the price action, which is pretty much just following the US. US bounced higher, so on. So it's following the US. So we might find the market's going to edge lower back down to the sort of these zones. And just to see how it goes, whether we retest 25.028, just to see if there's going to be some negativity still around in the Asian market into the Hang Seng because of what's happening with the US. They may see that longer term, okay, things are going to start to escalate. I would expect they're going to get worse before they get better in that respect. So it may be a heavy day today. We just have to see how it opens. If it opens down and we start to get these holding below the MAs, then great. It's probably better to look at the Hang Seng over here. All right, so that's the 30-minute chart. Let's just go to the 5. You can see what I mean. So that's weighty there. It's popped up. If we hold below these MAs, we start to get below, the shorter term ones and get a lower high to work into, we could be charging through that low at 29, below 25 at least, which could be another 100, 200 points on the downside if that opens up. If not, we might get a bit of a back and fill, and this is the level to be watching out for, because that's kind of, if we start to work off these lows, we've got a higher low coming into place, and we start to get a higher low. Let's just show you something like this come in to action, then expect we're going to back and fill up to this level, which means back and fill just means a retracement back up. And if see what happens at that level. If we get sellers stepping back in, then yeah, there's still some negativity around and we have to be careful. Well, look for shorts anyway. Right, that's it on those. Let's see where the SPY opened just quickly. That's not it. That's it. SPY has, oh, there you go, absolutely knotted on the open. So that's not a good sign. I want to see if we get some selling coming in and it starts to get heavy again. Okay, so just be wary of that. I mean, if this takes off to the downside from here, that's not going to be, it's going to be a hard one to trade because it opens and there's negativity straight off the bat in a stretched, extended, gappy market, and that's a tough one. Let's get over to just key things. Look at the Dow on the open, and that's the 5-minute chart. Go back to the 30. You can see this candle, green candle was the open. Okay, so we got sell off into the close, green candle, bang, and it had a bit of a flush lower and then rallied into the close. So, you know, considering what's going on, it's a strange sort of move. They're bullish, buoyant, whatever you want to call it. Looks destined to go up to the highs at 27.45, whatever it is. And if we go back to the all-time highs, let's just look at the daily chart. Look, if we can break through that, it's looking up to the highs, you know, to retest the all-time highs. It looks like it's no stopping at the moment, and it's, you know, that's why the reason why we had this massive bullish market from the GFC was just stimulus, and now everyone's looking at it going, well, there's still stimulus. They're going to stop companies from failing. Boy, the whole market. Forget about how much debt they got at the moment. It doesn't seem to be an issue, and the market's still just going to continue to go higher until something dramatically changes it. But it'd be interesting. I mean, someone was talking about it, buy the rumor, sell the fact, which I kind of believe in. They're saying you wait until there's no stimulus. They don't need it. Okay, when there's no stimulus, the market is well and truly stretched, and then all the realities will come to light. Now, if that's the case, unemployment, all that sort of stuff, and then they're going to be still massive unemployment. And that's what I would expect, a bit of a sell-off. I mean, just because they take it off doesn't mean things are going to be rosy. The market's already factored, well and truly factored that in. All right, so that's a Dow. You can see the DAX pretty much sideways into the close. Dow, yeah, sorry, UK FTSE sideways into the close there as well. That's looking a bit choppy. I mean, completely choppy. Not a bit, but a completely choppy action here. But it's still, you know, it's been contained, sort of rangy the last, since 25th of June. So on the 30-minute chart, that sort of rangy action being capped at this level, potentially coming down. We'll just have to see. But if it's going to stay rangy, that's fine. If it starts to get through this level and starts to punch up and retest it from the lows, then we've got a bit of trouble there on the FTSE. Let's just go to the last couple of things. I'll look at gold. Actually, go to the US dollar first. Get a bearings on the US dollar. Getting sold off. It's just opening up now. We've got a lower high coming to play up here. So that's when the market was melting down in Asia, melting down. As soon as they got over that, bang, straight back down again. That was 6:30, so it didn't last long. The safe haven buying into the US dollar before it got sold down again. And there's a massive amount of futures short on the short side, futures contract. So I think it's the largest amount of short positions since the last few years, I think. So there is a big bet on the downside, and you can see that it's well and truly trending down. So we're just expecting that with more stimulus, all that sort of stuff to keep devaluing that US dollar. And longer term, getting potentially, if you can't find a bid off this level, then a strong bid at least, then that's just going to continue south, which means it's going to open it up to gold. I mean, that looks like gold didn't really do too much once the US dollar started to bounce, and then up she goes. So that's very, very bullish in gold, looking to those highs at, what was it, 1920, thereabouts, up here. I think that's the all-time highs. Don't quote me, but I think that's up towards that zone. So it's looking to retest that level up there. You know, as long as the US dollar doesn't get a bid, but at the moment it's well entrenched on the downside. And if there's more stimulus to come, another $1 trillion, you wouldn't expect that to get a bid on the back of that. On the back of it not getting through, yeah, we might find some short covering, a bit of a squeeze higher on the dollar, which you'd put a bit of pressure on, especially squeezing out some of these longs that built up on gold. But until that happens, and that's probably going to be play out in the next week or two. So we got that. Gold, Aussie gold, you know, actually did take off last night, so it's been quite choppy, even though gold's going up. I think the Aussie didn't move too much. yet gold rallied, so it sort of lifted Aussie gold, which is good for the Aussie miners today. And then we got last few things, crude oil. Crude oil, if we can see this kind of action, that's great. You just want to see this, if this can put in as a key high low at 41, say 20, and we get a bit of a pullback just to squeeze out some of these buys, squeeze them out, and we get some support back on the MAs again. If they start to buy it off, then that I would expect to get up through 42 and start to trigger up to 42.50 and above. And copper. Now, copper reacted quite hard, and that's going to be a bit of a problem if there's still tensions around with US and China. So I wouldn't suspect anyone that's been buying copper for quite a while to be too bullish on that up at these levels, up at these stretched levels, and start to unwind some of these long positions. But at the moment, we'll just have to see how that plays out. But it's definitely the way it reacted off those highs. Everyone knows it's stretched. Okay, so anyone that's long has been looking at that level for a while. You backed off from the level, they've sat through that, and if you start getting this reaction off that level again, it's pretty much entrenched that that's going to be a bit of a selling zone, and we might get a bit of an unwind of some of these long-term longs, which you'd be looking down here. So if it starts to crack in through here again, starts to trade into these lows, then we've got a bit of a problem on copper, and it could be looking towards a longer-term pullback. All right, guys, that's all I want to look for. I think pretty much it's US dollar again. Keep an eye on US dollar and your currency just to see what's happening, if there's still some positivity into it, if we're going to get a bit of a bounce, if there's still, negativity into the US dollar and positive into the equity markets, then yeah, things are going to continue on the way they are. It's going to be choppy and harder to trade, but there's going to be those things like that pop out from the sidelines, like last night. The tensions between China and the US, which will catch you off guard, but you just be wary. You're looking at your price action on all your different timeframes just to get a bearing of what's happening in the market. All right, guys, thanks very much. We'll be back in tomorrow. Leave us a like if you enjoyed what you hear and help us spread the word, and we'll speak to you again tomorrow. Cheers. Bye.